Hi, this is James Sugg with Westpac London's end of day report for Tuesday the 27th of November. Well, Greece finally got the bailout. EU finance ministers and IMF officials met from something like lunchtime yesterday until the early hours of this morning to hammer out the last few technical details. Basically, Greece has secured lower rates on the bailout loans, including a 10-year holiday, interest holiday, on earlier or previous bailout interest. They get longer to repay the money, and the next 34.5 billion euro tranche will be paid at some point in December. Now, I've got to say, Greek debt is unsustainable. There's no way it's going to fall from 190% of GDP next year to 124% of GDP in 2020, with the economy recessed and with the measures that have to be put in place as part of the deal likely to bring with them short to medium term costs in terms of economic activity. So it's going to be just a matter of time before we're back here again. I said this before. I said this for the first Greek bailout in May 2010. The second one was July last year, and now this one, that we're going to be back here again. Okay, at some point, probably we're going to have to see Greek debt just forgiven. I mean, these bailouts take the form of loans to Greece, so they actually add to the indebtedness of the country. And once we've had a few elections out of the way in places like Germany, remember Angela Merkel has promised that German taxpayers won't pay one pfennig more towards Greece, at least not until after the next election. So watch this space. That was the main news this morning. We had quite a bit of data today. The UK GDP was unrevised at 1%. That was in the third quarter. So the Olympics boost, still very much a driver there. We're looking for a slight contraction in fourth quarter GDP when it comes out in January, as the Olympics boost drops out. We had the OECD revise their growth forecasts. Now, as is always the case, because they revise them every 6 months, they tend to come to the party a bit late, and they just revise their numbers down to about where we are now. For example, for Europe, Euroland, they're forecasting minus 0.4% growth this year, and in 2013 they're looking for minus 0.1%. Westpac's forecasts minus 0.5% and minus 0.2% respectively, so just a tiny bit weaker than them. So although everyone's saying, oh, OECD's revised down their forecasts, in actual fact they've just caught up with the rest of us. In the US, we had flat durable goods orders in October. One surprise was that core capital goods orders, excluding defence and aircraft, actually posted a 1.7% rise. It's the first time that the first month of the quarter, October, has actually posted a rise in that category since the recession 3 years ago. There was weakness though in other parts of the report, with shipments down for the fourth month running. In fact, shipments of core capital goods are now running an 8.1% annualised decline, which is the weakest we've seen since the 2009 recession. US consumer confidence rose to 73.7 in November, according to the Conference Board Index. That's a new high for that index, a cyclical high. It was driven by expectations. The present index slipped slightly, despite an improvement in the assessment of the labour market by consumers. The Richmond Fed factory survey jumped from -7 to 9 in November, in contrast with other regional Fed surveys, which have generally been weaker and largely related to disruption from the superstorm. Richmond Fed didn't find that, and there was some very positive detail in that too. Their services and retail surveys were stronger as well in the Richmond area. House prices are up on both measures that were released today in the US, 0.4% for S&P Case-Shiller, 0.2% for the FHFA measure. So that's it in terms of the news today. The Dow at the moment, it's 5:10 in London, it's flat on the day, so nothing much there. And pretty lacklustre performances in Europe. The FTSE is up 0.2%. Canadian market, French market flat. The German's up 0.6, Spanish market down 0.1, and the Italian's down 0.25% today. In commodities, it's pretty lacklustre too. Gold's down 0.25% at $1,745 an ounce. Oil's down 0.2% at $87.59 a barrel, and copper, it's not even worth mentioning. It's flat, 354 cents a pound. And the Aussie dollar is pretty much unchanged from yesterday at 1.046 against the US dollar. We start getting quarterly clues for the Q3 GDP numbers for Australia. We get construction spending numbers today, Wednesday, Sydney time, and then I think it's CapEx on Thursday. But I'll be back to talk about that and lots more same time tomorrow.